Welcome, investors. And all other interested parties. I'm Chief Editor of Investoru Klubs Latvijas, and today we are visiting Apollo Group and its bond event. This event is an opportunity for Latvian investors to meet management team of first bond offering of Apollo Group. And Apollo Group is the largest entertainment group in the Baltics. So you can meet them in person. And yes, Apollo Group is implementing its first bond offering and will list these bonds on the Nasdaq Baltic bond list. And one could ask, why the James Bond theme? Well, my answer could be just to make life a little bit more interesting. We, of course, have this James Bond character, but we also have Apollo Bond event. And we, of course, are in cinema after all, and the bond yield is also 7%, as 007. What is on today's agenda? During the investor visit and this bond event, those present will have the opportunity to learn about Apollo Group's operations and goals, as well as company's brand portfolio structure, including the well-known brands Lido, Apollo Kino, and, for example, My Sushi. As I know, Apollo Group's goal is to expand its operations in Latvia, Lithuania, and Finland. And there will be information about the bond issue and its terms. And of course, there will be opportunity to ask questions to the company's management team. And you will be able to ask these questions after all the presentations are done. So be brave. And to make life a bit easier for you, we have access to Lido application. Now you just need to scan this code. And afterwards, when you are in this application, just type in your question. So hopefully I will read it afterwards and ask the management team. What else? I can whisper that those who listen very carefully will also be able to win some prizes. So let's start. So I give floor to our first speaker, which is Apollo Group's Head of Supervisory Board, Ivar Vendelin. And he will tell us about the potential of this industry and the role of Latvia in group strategy. The floor is yours.
Thank you. My name is Ivar Vendelin and I'm founder of Apollo Group. So Toomas will actually speak more precisely afterwards about the potential of Latvia and other markets, but I'll give you a brief interview actually how Apollo Group got started and what is Apollo Group. A lot of people, especially I think in Latvia and Lithuania, think that Apollo, that's a cinema and that's it. Actually, cinema is only part of our business and not so big anymore. Or we are not only the cinema brand. So basically, Apollo Group got started many years ago already, and the idea was to create an entertainment company, or like we called it. So eating and entertainment in the same portfolio. The idea was that people could come to the shopping malls and entertain themselves and got the possibility also to eat and possibly even to do it in the same time. So you don't need to go to the restaurant and be there for a couple of hours, then go to the cinema, watch a movie and be there for a couple of hours. So you could do it even during the same time. And that is how we started Apollo Group. So Apollo Cinemas is part of course, and one of the pillars of Apollo Group. But we started to create also restaurant brands. And the idea was that we wanted to have different restaurant brands in our portfolio where people could go and relax and have something to eat 7 days in a week, so that they wouldn't get bored. So we have very different brands like KFC, Lido, Vapiano, My Sushi and so on. And the idea is that they are all different. So basically, one day you want sushi, the other day you want Italian food, the third day American chicken. And of course, when Lido joined Apollo family, that was very, very important part of our group. And Lido is today one of the pillars of Apollo Group. So that was the idea that basically we have never wanted to sell expensive stuff or expensive food. We wanted that people can afford our food 7 days a week and come to us and enjoy affordable meal, a good cinema ticket, and other sort of entertainment. So that is the idea of Apollo Group. We are entertainment company. We don't sell fast fashion. We don't sell sports equipment and so on. So it's all about entertainment, eating and entertaining yourself in the same loyalty program and in the same places. Riga Plaza is an interesting example. Actually, we have here our cinema, Vapiano, My Sushi, Lido, all next to each other, and all synergies and all businesses help each other to be even better. So that is how Apollo Group got started, and I'm gonna stop now, and Toomas will take over and speak about our plans for the future. Thank you very much.
All right. So here is our journey on the screen until today, and we somehow feel that we have reached to the certain maturity level today. All of our businesses are profitable, and so far we have been growing with from our own cash flow, and also some bigger M&A transactions were made by the parent company financing. But today we feel that we can grow even faster, and to accelerate this growth, we are looking for the capital markets for investors' money, and that's why we are talking about the bonds. I think Apollo is a quite unique company, or quite a unique concept, because if you look at our competitors, then most of them are more like monoliners operating one or two brands. But Apollo, as Ivar mentioned, combining the entertainment, the cinemas, and also bookstores in Estonia with dining. Also, like you see in this cinema hall, that you can order the food to the cinema chairs. So this is something that our competitors doesn't have. This is our current brand portfolio. Consists of 10 different concepts. And especially with the dining concepts, we have tried to look into the full spectrum of dining out experience, meaning that all the brands that we're adding to our portfolio, they should complement each other and not cannibalize, of course. And as Ivar said, offer something to eat 7 days a week. So we have an American quick service concept as a KFC. We have a family bistro, Lido, and a very similar concept in Lithuania called Delano. We have Italian concepts in different markets, Vapiano and Can sushi, and so on. We might still be missing something from this portfolio. Just to give you an example of, let's say, strong Asian concept besides sushi. I mean, going towards Chinese, Vietnamese, Thai food, or perhaps desserts are a bit underdeveloped in our portfolio. So those are the directions we are looking for when building the portfolio even further. A few numbers as well. On the upper side of this slide, you will see financials from the previous financial year. And our financial year is not exactly aligned with the calendar year. So it begins in May and ends in April. So this is 24-25 figures. We posted revenues of 227 million, EBITDA of 40 million, and 3.8 million of net profits. and we have 240 million of assets in our balance sheet. In the investor materials in our webpage, we also have our recent 9 months figures from May 2025 until January this year. So you are kindly asked to look also on those figures and see how we are doing. I can say that we are doing good. And on the bottom side of this slide, few operational figures as well. So currently we're operating in 4 markets, Finland, Estonia, Latvia, Lithuania. We are employing more than 4,000 people and operating 170 locations across those 4 markets. And another thing that we are very proud of and which is important cornerstone of our concept is the loyalty program. So it's called Apollo Club, and it's already got 1 million active members. Active means the one who has made a purchase in any of our businesses within last 30 days. And we have here as well quite a significant growth opportunity, as for example, Lido in Latvia is not yet linked with the Apollo Club loyalty program. So Lido has its own very strong loyalty program. So we are thinking how to align, how to merge those programs in the future. About geographical distribution as well. Finland is our smallest market currently. In the last fiscal year, it made 6% of our revenues. Today, it's already around 8%. And we believe that Finland could be the biggest growth market for us. So in 5 years, we expect to reach up to 20% from the group revenues coming from Finland. Estonia and Latvia are quite similar in terms of revenues, both around 40%. If you look at the number of units that we're operating in both markets, then you see that it's quite a big difference. But this is because in Estonia is where Apollo was born, and we're operating also a couple of smaller concepts in Estonian market. But Latvia is dominated by Lido, and Lido has big restaurants, 1,000 square meters and even up from that. So that's why the difference in unit is quite significant, but the revenues that are coming from both markets are quite similar. And Lithuania, the third biggest market with 14% of revenue, is expectedly the biggest growth market in the Baltics. In the end of last year, Apollo acquired 2 new concepts in Lithuania, and one of them is called Delano, which is very similar to Lido. So it's basically a copy of Lido. And Delano currently is operating only in 2 locations, one in Vilnius, one in Klaipėda. And since Lido has around 20 locations here in Latvia or even in Riga region, then we believe that Delano in Lithuania could be more or less the same size as Lido today is in Latvia. So great hopes with that concept in the Lithuanian market. But for the development plans, I will come back in a while. We have divided our concepts into 3 segments, and the biggest one is the proprietary restaurants, meaning the brands that we own, with a 40% of revenues roughly. Then franchise restaurants represent 30%, and then the entertainment, where Apollo was born from, is also around 30%. So as I have seen during these days when we have done this roadshow in different countries, then it often comes as a surprise for the people that Apollo is known, yes, as a cinema or as a bookstore in Estonia, but in fact already 70% of our business lays in the restaurant business. Bit about the restaurant brand as well. So our own restaurants, Lido is definitely dominating here, operating in Latvia and Estonia. So besides Latvian units, we have 5 locations currently in Tallinn, Estonia. And with Lido, we are also thinking about expanding this concept to Finland. Delano, I already described that it is very similar and has a big potential in the Lithuanian market. And then also My Sushi is something that we are currently operating in Estonia and Latvia. So we have around 25 locations in Estonia and now 6 first locations in Riga. So we also believe that My Sushi could grow up to some 25 locations here in the Riga area. Then the second segment about franchise brands, I think it's worth to mention that both of those franchises we are having the exclusive rights, meaning that no one besides us can operate those locations or those brands. And the KFC we operating in all 4 markets, and Finland is definitely the biggest growth market for KFC. We are currently having 8 KFC restaurants in Finland, and we expect to grow it up to some 25 or so locations in coming years. Last calendar year, we opened 3 new KFCs in Finland and 7 in the Baltics. And now the Finnish KFCs are one of the biggest in the whole group portfolio. So it shows that it works quite well in Finland. And with Vapiano, we are concentrating to the Estonian and Finnish market. And as I said, in Lithuania, we are developing further the Kankan brand that we acquired end of last year. So we recently just exited the Lithuanian market with Vapiano because of that. So because just Kankan had much more locations and also much better brand awareness. And then the entertainment part, cinemas and bookstores. With the bookstores, we operating only in Estonia. We don't have any intention to move abroad, but in Estonia it gives us a significant addition to the business volumes and also to the brand awareness. And with cinemas, we are currently operating all over the Baltics. However, Riga has only 3 cinemas here, then Akropole and then Tomina. And in Lithuania, we have also only 3 cinemas, 2 in Vilnius and 1 in Panevėžys. So we see also significant potential to expand the cinema network both in Latvia and Lithuania. So if new location opens up that fits for our concept and the conditions are right, then definitely we are ready to expand also the cinema network. A few more words about the loyalty. As I said, that this is one of the important cornerstones of our business with its repeated visits. So we see that the loyal customers are visiting us much often than in average, and also spending more. So their average basket is higher, and the base has been growing quite fast. So during the last year, we added in average 7,000 net new members to this loyalty club. And as I mentioned before, we still have quite a big potential on growing this base, as Lido in Latvia is not yet part of the group-wide loyalty. Lido in Estonia already was merged to this loyalty program in last year, and also KFC is yet having their kind of own separate loyalty. So we're also working with the KFC franchise owner on how to merge those 2 loyalty programs without confusing customers and without dissolving the kind of the brand essence. So up from 1 million, there is a certain potential to go up with this loyalty. And also what is unique about the loyalty is that customer can spend the money in the cinemas and use the benefits in the restaurants, or vice versa, that spending money in the restaurants and then using benefits in the bookstores in Estonia, for example. So we have a lot of cross promotion possibilities here, and also while the competition is their loyalties is related to the single brand, then our loyalty works across different concepts. About future plans as well, a couple of words. As I said, we are currently operating in 170 locations in 4 markets, and our intention is to grow this number of locations up to 300. So we aim to add another 130 locations within coming 5 years. And we have counted this way that around 75% of this growth should come from expanding the existing concepts in the existing markets. So relatively a low risk expansion. And then 25% could be then introducing some new exciting concepts, either bringing some strong franchise brands or via M&A rather than building something from the scratch. And if you look at the markets, then already mentioned the plans in Finland. So we expect the Finnish market to give 20% of our group revenues in 2030. So high growth potential, especially when it comes to KFC. Also, some new Vapianos are planned, and then introducing a Lido concept in Finland. In Estonia, we are continuing the selective growth. So if a new venue opens where some of our concepts could fit, then and the conditions are right, then we are definitely considering opening something there. The same applies to Latvia. But about Latvia, what is very important is that today Lido's business model is based on the central kitchen or central food production, and this production is currently divided between different units, and they are all working at pretty much at this peak capacity, meaning that this sets at the moment some constraints on expanding Lido further, which is why we have started building a new central production facility here in Riga, in Imantā area, that should be open and up and running in the middle of next year, 2027. It's a huge facility with 16,000 square meters, and it basically triples the current capacity of the Lido's central production, which means that we can also then start to produce the food for Lido purposes in Finland. We can also expand the Lido in Estonia from the 5 locations to a couple of more, perhaps moving also to the other regions in Latvia, because I have also got a couple of questions before today here that why we are only working in Riga. So there are other nice cities and nice places where to expand Lido. So exactly, this is also waiting for the central kitchen the new central kitchen to be opened, and also the mentioned Delano concept. I believe that from the current 2 locations we can easily grow, let's say, up to 15, and then the new central kitchen here in Riga will also supply food for the Lithuanian market for Delano. So this is one of the biggest and most important investments also for us. We are intending to put 10 million into the central kitchen, and as I said, it should be opened in the middle of next year. A few words about the management. So won't read out all the names, but just to mention that we have a kind of 3-layer management structure. First, the supervisory board, who is approving the company strategy and also the investment projects. And Ivar Vendelin, whom you saw here on the stage, who is the founder of the company, he is the chairman of the supervisory board. Then we have a management board. Besides myself and our CFO Aleksei Gadorko, we have also Tadas Ratskauskas from Lithuania, who is our head of development, and then his background is from VP Group, specifically from the Acropolis management team before he joined Apollo. And then each of our businesses have their own dedicated management team. So we can be sure that each and every business gets enough attention when it's needed. And then some functions are integrated on the group level, like finance, IT, supply chain, home delivery relations, and so on. But everyday business decisions are made down on every business. And then this structure also helps us to reduce the risk of key people leaving. So if for some reason something happens, then we have quite a good backup from both sides. And about Apollo's ownership as well, our sole shareholder is Group, which is one of the biggest private investment companies in the Baltics. And besides Apollo or this entertainment business, Group also has assets in media business. For example, TV.net here in Latvia belongs to Group, as well as in real estate, in defense industry, and also in pharmaceuticals. So very wide portfolio of different businesses, and it's also kind of diversifies the risk of a single business. Few words about the financials as well. As I mentioned, that last year we made 227 million of revenues, and we're growing 7% compared to year before. And EBITDA was 40 million and growing 12% compared to the year before. And I think that this is a great example of the economy of scale. When our headquarters are in place, then opening each and every new unit would contribute to the higher margin. So we expect the profitability to grow faster than the revenues also in the future. Our assets around 240 million, been quite stable, but with the expansion project, of course, the assets will also grow on the balance sheet. And as of now, our capital structure looks so that 27.5 million we have a kind of classical equity, and then 64.5 million is a shareholder loan, which is also kind of equity-like layer, meaning that we don't serve it. We accrue interest on the balance sheet, but we don't serve and we don't pay out. So it is like equity. So, and we don't have any interest-bearing loans or financial obligations from outside of the group. Okay, but now to the more exciting part. So the bond itself, and I invite here Maira Gustafsson, who is representing LHV Bank, and who is LHV is organizing our bond issuance. So here you are.
Thank you. Hi, so as Toomas said, my name is Maira Gustafsson from LHV Bank, who is the arranger of this bond offering. Just these terms, a little in simple language, then it is unsecured bonds with 5-year maturity date. And the coupon is 7% paid quarterly. So every quarter you get the interest payment that adds up to 7% per year. This issue size is planned to be 50 million. If the demand goes really high, then as you saw, they have a lot of bands, so they can use up 70 million as well. Important thing to consider there is that 25 million will go to the repayment of owner loans. But even if we upsize it to 70 million, it will not go over this 25 million. So, and maybe if we are on the topic of owner loans, then as Toomas said, currently there are no outside bank loans, only the owner loan, and some of it will be staying in. And the owner loans, kind of how you can service them, how you can pay interest, how you can pay dividends, they are regulated much harder than the bond itself. So it's a public offering in Estonia, Latvia, Lithuania. So we do expect institutional investors and retail investors to all participate. Nominal value is 500 euros, meaning that the very first entry to the bond market, if anyone considers, can be with a 500 euro ticket. The use of proceeds also, I think it came out really well from the previous presenters, that they do plan to expand, they do plan to take advantage of the scale effect, increase profitability and presence throughout the markets. And as said, then some will be paid for the owner loan. It will be listed in the main list, meaning it is a regulated market. And the legal advisor has been LX Raidla supporting it. And maybe just an important thing that Apollo bond will have, not every other bond in the market is a trustee, which acts as a benefit for the investors. The trustee is a law firm, Hedman Partners, that really follows all the obligations that Apollo takes, quarterly reporting, quarterly covenant checks, that this is made in coherence with the terms. And locally, we are the arranger, but locally in Latvia, Signet Bank is also supporting as a sales agent. So your own Latvians can answer direct questions from there as well. Yeah. Then that's briefly about the terms. And really important part about the terms is the governance itself. So meaning financial targets that the company can't go over from. And I think working with Apollo Group, it was a really nice conversations that we had. So obviously you never want to have any restrictions when you're on the growth path. But with Apollo, it was really that they believe in conservative financial policy in that terms that you have to be balanced with the growth and keeping the financials in shape, that if something happens, you do have headroom. And we have, I think, every normal covenant that you could look for. I think in the market, there are a lot of bonds that have only maybe one, but we have three. So meaning we have covenant for net debt EBITDA, meaning that the cash flows that cover the debt has to be at least 3.5. We have adjusted equity ratio, meaning that the equity then is the book equity and also the shareholder loans. So this as well has to be at least 25%. Interest coverage ratio with 4 times, and that's that. And again, I would say that all the owners' loans that would be left in, they would be serviced and the dividends to the owners paid only in case the first covenant is at least 1.5. So meaning that it really has to be in good shape that the owner gets any money during the bond period. And how to subscribe? I think all of the main banks have put in their internet banks Apollo Group bonds to subscribe for. In Latvia, you can also go to Signet Bank and all Swedbank, SEB, Luminor, Citadele, Fluor. So I think all the lines are open to make the subscription when you feel that's the right thing to do. And now I'll give back word to Toomas, because he has something else.
Yeah, that's not all, as they say in this what is TV shops. Just moving back to the previous slide. So below you see the timeline. So we started a week ago with this bond offering process, and the end of subscription is 16th, which is next Monday. So if you would like to subscribe, then please keep in mind. And the official closing time is I guess it was around 3 o'clock, but some banks might close the subscription earlier. So please keep it in mind. And then the allocation and the subscription results will be announced on 18th, which is Wednesday next week. And issuing date is Friday, and then Monday, the week after, will be the most likely the first listing date on the stock exchange bond list. But moving back to this, as I said, we have 1 million loyal customers, and we definitely expect that at least some of them will also become a loyal investors to Apollo and grow with us. And for that purpose, we have worked out a sort of investor program in our loyalty program. So everyone who is subscribing to the bonds, doesn't matter how much, it can be just a single bond, will receive Apollo investor status. And then the one will receive during the first year 4 free Apollo Cinema Star seat tickets, and also 15% of discount on certain snacks and drinks. And after 1 year, we will definitely think again that how to say thank you to our investors and how to keep them in mind. So yeah, please stay tuned for that as well. And usually the last slide says thank you, or do you have any questions? But I will leave those three things on the screen. So why to invest in Apollo Group bonds? First, fixed interest, so that is paid out quarterly. So in every 3 months, the investors can expect some money arriving to their bank accounts. Secondly, our market position with 170 locations and 1 million loyal customers. So this is something that is hard to replicate by the competition. And thirdly, as Ivar said in the beginning, that we don't sell expensive stuff. We don't sell Rolex watches. So even if the economy doesn't do very well, then with this affordable entertainment and affordable dining options, we are still able to grow even with the economy doesn't going so well. That we have the proof also from the previous years. So I will leave this slide here on the screen, and I guess we are ready for the questions.
All right, we have several questions already, and maybe we can also have this Slido application code back, so you can again scan it. But yes, and all the experts and Apollo Group's management team, maybe I suggest you come back on the stage, because if you answer those questions, it would be better to see you. So the first one is, why do you think 7% yield is good for unsecured bond when there is a big chance of rising in inflation and instability?
I would even like to give a microphone to our CFO. He is, I think, the best to answer that question.
Hi from my side, and thank you, Tomass, for not letting me sit calmly. Yeah, so we understand that 7% is lower than some other real estate construction companies may offer, but in our case, it's important to understand that this bond will be the only external financial instrument in the company, thus offering much lower risk profile for investors. Also, we have a set of safety covenants, which will be reported on quarterly basis in our financial interim reports published on stock exchange Nasdaq Baltics. Also, we have a third party which verifies calculations, so-called trustee, which is also something new and not usual compared to similar offerings. And also, we offer very good diversification option for investors. Again, new sector coming to the market, thus giving very good opportunity to invest. Thanks.
Okay, anything to add? What are your plans?
I may add also one.
Yep.
One point is about diversification of business on a business level. So we still have 4 countries. We have different restaurant brands, different businesses, and history showed that although those countries are situated very closely to each other, economies of Lithuania, Latvia, Estonia, and Finland move sometimes in different directions, and this offer us and you as investors additional assurance that business as a whole will remain on a stable basis.
Okay, I see. Okay, but what happens in the case less than 50 million is raised? Still 25 million go to shareholders and the rest to development of Apollo?
Yes, of course, Apollo, yeah. So again, 50 million will be raised. Half of them will go to reduce leverage of Apollo, and parent company will free up collaterals on Apollo level and become more independent from parent company. Also, this public side is also important for us. So you see our businesses in city. We want to become public company with the goal to be famous, let's say, for people to know us. Again, and this huge investment program aimed to increase efficiency and invest into Finland, Lithuania, Latvian central kitchen. This is the plan.
I think I add quickly, understanding your question, that no projects will be put on hold if the amount for some reason is smaller than 50 million that we wanted to raise.
All right. What are your plans in Latvia? What does Lido Central Kitchen exactly mean?
Yeah. Basically, like I said, that Lido joined Apollo family some 5 years ago, and it has been a very important part of Apollo Group. And we are very proud that such a company is in our family. We have Lido restaurants now also already in Estonia, and we are opening them. The idea is to open them also in Finland. So Lido Central Kitchen is the place where actually the food is really made. So if many years ago food was done in the kitchens of the shopping centers and the chefs were working there, then actually shopping mall premises is too expensive to have. We don't need big kitchens there. Actually, nowadays already the food is prepared in one central location and then it's taken to the restaurants. And as nowadays all the equipment and the kitchen equipment is so professional, so good, so you can control the quality and the food level much better, even if you do it in one place than in different restaurants by different chefs. And I'm not speaking only that Riga Central Kitchen does food for Riga. We do food for in Riga, for Estonia, for Lithuania, and hopefully in the future also for Finland.
So I see. So Finns will eat their schnitzel from Latvia, from Riga, yes?
Yes. Latvians are very important for our business. So we are, and still, if I watch geographically, for some reason Latvia is in the middle. So Riga is a very important, especially Riga is a very important place for Apollo Group. Yeah.
Okay. Why unsecured bonds?
Effectively, the only financial liability and restricted possibilities regarding owner loan, and the fact that this owner loan will also be subordinated. So this keeps risk profile at a very low level.
What is the superiority of owners' loans compared to bondholders?
Below.
Okay.
So bondholders are on a higher level than owners' loans.
Okay. The next one. Why did you decide to divest O'Leary's operations?
Okay, I take this one. So O'Leary's, if you look from the distance, then it looks very much like Apollo's business. It's combined entertainment and dining, but in fact it was quite difficult to manage in a way that each venue was a bit different. Each venue needed to have a separate content creation, and also since the locations are quite big, it was a very capex heavy business also. So we had to make the decision that whether we'd like to develop it further or then exit the business. And looking our plans for example, in KFC, in Lido, in Delano, then we decided that since we don't have a unlimited amount of money, that we have to prioritize something, and then we decided to exit O'Leary's. And also what we are looking always is the synergies between different businesses, and then we couldn't find enough synergies from that as well. And I think that the good news was that the head of O'Leary's, who was been managing this business for a couple of time already, so he bought out this business and continues to manage this, and also we continue cooperation with O'Leary's on some food production and so on. But it wasn't anymore a kind of perfect fit to our portfolio.
Okay.
Maybe I just quickly, that we don't like businesses that are stable, that we like to grow. And it was difficult to find too many of new locations in Baltics where to grow with such a big concept. So that's,
I see. One is has questions about your balance sheet, actually. So one number jumps out in your balance sheet. Lease liabilities. Could you please clarify this balance post of 100 million? How it is calculated?
Yeah, this is based on IFRS, which stands for International Financial Reporting Standards. So according to this approach, we should basically, in simple words, forecast our rent payments until end of contracts, discount them, and took them to balance sheet as liability. But on the other hand, we have rights of use. So it's kind of financial lease, that behaves in this way. Do you get it?
Did you get it?
Who got it? So, but again, important thing to keep in mind that we are fully in compliance with financial standards, report confirmed by auditors. So it's not our invention or creation or a desire to to make things more complicated than they should be.
Maybe I'll add also this one fact that why we have the governance in pre-IFRS basis. So EBITDA is, as you know, almost like cash flow before capex. So net debt to EBITDA is also pre-IFRS. So you could really see the cash flow effect. So
yeah.
Okay, I hope you now get it. Where is your, sorry if I butcher, OTT TV platform?
We sold it a couple of years ago to Go Free. So it's now merged to the Go Free platform, and and hopefully serves customers still.
I see. Okay, there's very interesting question. To what extent do you see automation as replacing employees? Is this your strategic goal?
Yes, exactly. That this is one of our big strategic goals. That of course we understand that human labor is expensive and they always need it, but for sure that self-service cashiers or standardizing the manufacturing of food and everything, this is one of our priorities for sure. So either it's a central kitchen or is it the restaurant, the more machines can do for you, then you can be successful. Otherwise, if you're just depending on human labor, which is more expensive every day, it's difficult.
Yeah, and I think that you can also notice in this very cinema that we have a self-service shop. So if you pick something from the shelves, then you check it out yourself. So no human interaction is needed anymore. And then we're also looking to similar solutions for our restaurants. So people could be able to order the food and also check out without the help of human interface, and also some food production machines like pancake machines are coming with a new central kitchen.
Okay, so how many jobs approximately with this new central kitchen?
You mean drops of people or?
Yeah, people.
Yeah, actually, it's so we are growing so fast. So actually, it's not that it's dropping. That good people have always place in our company, and it's not that we are just saying that okay, now we have in Latvia 2,000 people and now suddenly it's 1,000. No, it's actually we are anyway opening new restaurants, developing our businesses. So we more or less good people are used, not used, but they go to another let's say place to work and so on. So inside our group, so we try to keep the people in our group, especially the good ones.
All right. Besides central kitchen for efficiency, in slide was info to invest in digital infrastructure. Something fundamentally new planned or just improvements?
We briefly described already a few examples that the self-service cashier desks, for example, also a new mobile application is coming out during this year, which also makes the kind of the user interface and customer flow easier within the app. So it's easier to buy cinema tickets. We will also integrate our other businesses to the application, so it will become a kind of a super app at that end. And similar other examples. So perhaps nothing too revolutionary, but we are constantly looking that if the machine can do the same job as a human being, then we are using the humans for the more complex interactions where needed.
The next one. Please elaborate on your stress testing scenarios in regarding to economic downturn in Baltic economies. What amount of GDP decrease would be bearable?
Difficult to say about exact numbers, but like I said, I think when I started, and Tomass same way, that if there is an economic downturn, then we are actually doing even better. So it's not a problem for us. Some shopping malls even say that they are waiting until Lido turnover starts increasing, because then they know that the economic downturn is over. So we are quite good in this way. Of course, when some other crisis hits, like pandemic was COVID pandemic, then it was of course difficult for us. But if it's let's say economic downturn, then we are quite happy, as we are not selling the high-end expensive food, and people come from the more expensive restaurants to our restaurants, and so we are quite foolproof in this matter.
Just to add a few numbers, that this bond will be the only interest-bearing financing instrument. So in case of 50 million issuance, the interest cost for the year would be 3.5 million, and our operational cash flow is around 24 million. So we have plenty of room to service those interest without any fear that somehow the interests won't be paid. So we have a huge headroom there.
How did you even survive pandemic? Because everything was closed.
Yeah, it was a difficult time for us, and we as the owners, we put money in every month and every quarter, every year, and of course we made a lot of changes in the company, but we knew that this pandemic will be over, and instead of closing down cinemas like somebody suggested and a lot of people suggested, we even invested and opened more, because we believed that this craziness will be over and everything will be back and fine. So yes, it was a very difficult time, expensive time for us, but it was the best university for us that we could get, that we came out of the pandemic much stronger than when we went into that.
I guess the sums wasn't small.
Yes, you are right. It wasn't small, yes.
I hope you are not tired, because the questions keep coming, right?
Please.
Who owns Lido real estate on Krasta Street?
Lido.
Yeah, on Krasta Street.
Lido.
Yep.
Yeah.
Lido.
Yeah.
Are you considering bank loan in 3 to 5 year financing plan? And in case of such a financing, what would be subordination with bondholders?
Yeah, so today we do not have such plans. The bond should stay the primary financing tool for us, and of course we have this leverage ratio covenant, which also sets boundaries for us in this direction.
Who will own Imantā kitchen real estate?
The real estate company is owned by me, and I own the real estate and I develop it. And Apollo Group is investing into the premises. There are a lot of real estate investors who are interested in investing, I understand, in Latvian real estate. Yes, we always welcome. Send us a mail and we can always look into that, yes. Mm-hmm.
What is like to work with so many different companies?
Well, it's definitely interesting in a way, but as you saw on one slide about the governance structure, that each and every business has its own dedicated management team. So my role, or the group management role, is more or less to align those businesses, not to run into everyday operations or go and teach someone how to bake a cutlet. So the group management is aligning those businesses, and each and every business is responsible for everyday customer operations, for sales, for marketing, and so on.
What safeguards are there? But because in the prospectus, to preventing the 25 million shareholder loan repayment from taking priority over bondholders if the bond issue raises less than 15 million.
Yeah, in that case, this 25 million will be repaid, and just to emphasize that it won't go to the shareholder as a dividend or cash out or something. So it will go directly further to the bank, to the Swedbank, who is the creditor of Group. So the shareholder is decreasing their bank leverage, and also Apollo can free some pledges that are put against the loan. And as Ivar said before, that even though even if it happens, but I believe that it won't happen, that if we manage to raise less, then none of the projects will be put aside. So Apollo itself is also earning a decent cash flow last year of 24 million to invest, and we have always invested almost all of the free cash flow that we earn. Just an example, a year ago we invested around 20 million of our own cash flow. So we have still quite a big ability to invest further.
I know I already asked you this before, but aren't movie theaters a thing of the past these days?
I'll say always like that if I would have gotten 1,000 euros for every time when somebody asks me that, I would be a rich man. So yes, no is the answer. I think bad movie theaters go bankruptcy the same way like bad platforms where to watch movies. So if you have a good movie theater, then it will stay. Movie theaters stayed also when TV appeared, or VHS cassettes appeared, or DVDs, or Netflix. So it has been always been a story that now its time is over, and then everything goes on. So I still think that people want to socialize. They want to come out. They want to take their girlfriend or boyfriend and to watch movies from the big screen with a good audio. So they will stay. But bad movie theaters, yes, they will disappear the same way like other bad businesses, like bad restaurants or bad movie platforms or so on. So I think we are quite safe in this way.
Okay. What are your assumptions for choosing more expensive bond financing versus, of course, cheaper bank loan? Or bonds plus bonds?
Yeah. So first of all, we see value in going public. So we're a consumer-faced company, and we invite retail investors from all Baltics to invest into Apollo, and then to consume stuff in our businesses. So first of all, and then second of all, we like very much bullet structure of this obligation, so we don't have to service main body right away, as opposed to bank loan. So each year we will pay out interest expenses, and main body will be paid out only 5 years, which suits us the best in current circumstances.
Any IPO plans?
No, we can't comment anything.
Is investing difficult?
I try not to laugh and not to give some stupid answers. So Tomass, maybe.
It means that is the best question.
I exactly don't know whether it was meant that is it investing to particular Apollo bonds is difficult, meaning that going to the internet bank and then trying to find the right place where to click. For that purpose, we have materials in our webpage. So we have screenshots for every bank in the region, and hopefully the interested investors can find their home bank and then see that how to go through those clicks and really invest. But if it was more meant that for example myself, that how difficult is investing, then I'm a kind of boring investor myself, so I'm tending to buy and then sit on my hands, so to say. So buy and keep, and then for that purpose, I have mainly invested into the wide indexes, ETFs, and also that's why the bond fits very well to my portfolio. That in one hand it diversifies the portfolio, but in other hand it is a kind of a buy and forget type of instrument. So for me, this decision was quite easy to make, that whether to subscribe or not. I hope I answered. Okay.
Yeah, there is also strategy to invest into what you understand, what you can see, what you can use, and it also provides additional, let's say, reasonableness into this approach. So you see cinemas, you see Lidos in Latvia, my sushis in Latvia, so you understand what you are doing.
All right, I think that this may be the last one. You can still try to type it in some more, I think. What are your A, B, and C plans for cash flow sources in paying back bonds at maturity?
We have different scenarios. Of course, in 5 years is a pretty long period, so we don't have a decision at the moment. We haven't ranked those plans as A, B, and C. We just have different options. One option is to roll over this bond. Then the other option is to use bank financing to refinance it. Then we have an option to actually repay it, because our forecasts demonstrate to show that we can do it if you want to. And last one thing that we cannot discuss.
Yeah,
All right.
like Alexei said, or Toomas said that our cash flow EBITDA is already 24 million, and we are quite sure and hope that during the 5 years time we will make it even bigger.
All right, I think then we can finish this part.
Thank you very much.
Thank you.